Hey folks, Patrick again from Soaring Profits. This just in, we ended up getting the Federal Reserve Bank Chair Jerome Powell having his update today with the FOMC meeting. Bank rates are going to be, the overnight Fed Reserve bank rate is going to be raising by 50 basis points, sorry. That's basically taking the overnight rate to 0.75. These are still fairly accommodative stances that the Federal Reserve is doing, but they're realizing that they do have a problem. And they're realizing that inflation is running away. However, they do, with these tightening that they're doing right now, it does kind of sense like they're believing that they're at the peak of this. So what we're looking at right now is Fed Chair Jerome Powell. He's currently speaking right now, and he is going to be raising the overnight Fed rate reserve 50 basis points. How does this affect you? What do you do with this? Why do you care? Well, this affects everything. If you have a mortgage, if you're a renter, if you are going to purchase a car, borrow money for a loan, anything like that. These are the rates that the banks use in order to estimate what your payments are going to be through the interest rate that they're going to accept for you, okay? So here in Canada, we have the Bank of Canada that has already done this. They did their 0.5 here earlier in the month, well, last month. But we can kind of look to this, the guidance that the United States is coming from, and expect that we're going to see it again, right? So we are on an upward trending interest rates, bank rates for the foreseeable future. What we didn't get today, and which is really important, is that we didn't get this rug pull. We didn't get this, oh my God, they're going to crash the market, they're going to crash the economy through the tools that they have. I've talked previously about Paul Volcker and his ability back in the 80s where he pulled the rug out from the entire economy, crashed the markets, crashed housing, crashed a number of different things to conquer inflation. So what the Fed is looking at right now is they believe that they are truly at the precipice of this inflation crisis. And I think they think that they've got it under control. The problem where I see right now is that consumers, us, the people that are borrowing money and purchasing things, we have to hit our satiation point. I don't know if we've hit it yet. When you look at all of the spending that's happening through earnings, whether it be through Visa, MasterCard, our debt instruments, right? Visa, MasterCard are all credit card companies, obviously. We're still spending. So what the Federal Reserve Bank is hoping to do is that they're going to send out some fear. They're going to put a little bit of fear into the consumer and say, you got to stop spending, guys. You got to soak some of that money up, or we're going to do it for you, okay? And the best way to put this is that if you have $1,000 a month, that's your nest egg, your profit, if you will, at the end of the month, okay? Right now, guys are going out and they're buying that new Mac. They're going out and maybe buying a new boat. Who knows? An asset appreciate. Great. The problem is that that's stimulating the economy still. Okay, so the Federal Reserve is trying to dry that up. They're trying to take a little bit of money out of your pocket and putting it back into the government's pocket or the bank's pocket, i.e. the Federal Reserve. So we're seeing this in Canada. We're seeing this in the United States. We need to see some consumer sentiment pullback and say, okay, listen, we're comfortable, we're stable, we're happy where we are right now, and take some money off the table. Or the government's going to do it for us. And I'd rather do it myself through my own means. So again, folks, today, we didn't get the rug pull that some people were expecting. We saw a very structured and confident, I guess you would say, would be the best word to put for what Jerome is looking for right now, his confidence in his ability to do this. The issue is that sometimes they're wrong. And when they're wrong, they can affect the market in a big way. So, as always, folks, thank you again. Patrick from Soaring Profits. Hope this was a little bit insightful. If you're looking to buy a house, if you're looking to finance property, or your financing product, whether it be a car, whether it be a business, those sorts of things, it's going to get a little bit more expensive for you. But that's why you guys tune in. That's what we're here to do, right? So again, as always, Patrick from Soaring Profits. Let's make some money together.